Well, the spot price of iron ore fell 7% today to below $100 a tonne for the first time since the depths of the GFC in early 2009. And it's not that surprising since the price of steel in China is also falling just as rapidly as the chart shows. Investors are suddenly wondering, where will it end? The West Australian iron miners won't be making as much money as expected, and their shares are tumbling. It might also explain why Gina Rinehart is trying to sell Fairfax shares and bashing out plaintive columns in magazines calling for lower taxes and wages. Getting new mines off the ground like her Roy Hill project in the Pilbara has suddenly got a lot harder. Meanwhile, the mining investment boom continues apace, according to new figures out today from the Bureau of Statistics. Now, happily, most of that money is on gas projects with long-term contracts locking in the price, but some of it is on mining projects, for which the price is now heading down the mine, as it were. Overall, business investment went up in the June quarter, but only because mining investment rose 10%. Investment in manufacturing and services fell. The market as a whole today fell nearly 1%, thanks mainly to the iron ore correction, and that also had a massive impact on shares in Boart Longyear, which does drilling for mining companies. It cut earnings guidance because, as it said with some understatement, the mining industry is in a state of flux. The money coming out of the miners seems to be going into high-yielding industrials like Telstra, CSL and the banks. Little action in Europe and Wall Street overnight, but some hefty falls in Asia today. And finally, the Australian dollar fell a bit more today. And by the way, I read an analyst report that said it's 30% overvalued on the basis of purchasing power parity. So there. And that's finance.